you're probably being used. We've heard time and time again that some big wireless customers get stuck paying hundreds and even thousands more for years and years because they think it's hard to switch. Not with us. It takes just about 20 minutes and you can change your plan anytime without extra charges. We use the same towers as the big guys, so you'll get the same fast nationwide coverage without the big wireless bill.
Our plans start at just $20 a month, and for a limited time, switch and get your second month free. Call 1-888-FREEDOM, visit consumercellular.com or a store near you and get your second month free today. Plans include $5 credit for auto pay and e-billing. See site for additional details.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. Dreaming about a getaway that feels far away but easy to get to? It's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all of this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age for Social Security, whereas 65 is the eligibility age for Medicare, and then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, They haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you as we continue through a busy week of economic data and the first week of Q4 earnings. And look, it's not, that we've gone too far into the year, but yesterday was, 2 full weeks into the calendar year for 2026. And I think it's interesting just to look at, kind of where things have gone so far this year to get a sense of what's been working, what hasn't been working, and, what some of the implications of that may be.
Are we all on the same page that it feels like it's been 2 full months? The data, the news has been flying pretty fast in 2026. Maybe that's always the case, but yeah, it's been chugging along here.
Yeah, I don't know that it feels like it's been 2 full months, but I can tell you that I got home on Monday of this week and was like, feels like it should be Friday already.
Yeah.
Sure. It had that vibe to it. So here's where we are right now. Through yesterday, the S&P 500 was up 1.18%. The Dow Jones Industrial Average up 2.26%. The Nasdaq Composite up 0.99%. And the cute little Russell 2000, here, have a treat, up 6.84%. So small caps knocking it out of the park so far this year. And look, I made a remark, and this is, one that I'm going to stick with, which is, look, unfortunately, the last 2 times that markets have tried this trick, July of 24 and Q1 of 25, they promptly fell flat on their face in subsequent months. It's the markets have tried this broadening out rotation a couple of times, and it just hasn't worked for them. And it's not to say that it won't at some point, because unless you believe that we're going to become the United States of Google or the United States of NVIDIA, tech is not going to continue to, in perpetuity, outperform the rest of the S&P by, 10% a year. That's just not how it works. We've seen these swings before where, in the early 2000s, energy had its day for a few years, and then in the mid-2010s, you had industrials that were, kind of the dominant player then as, we finally started to see an economic recovery. What we're seeing right now is, for the last 3 years, 23, 24, and 25, tech has been the dominant player, aside from a couple times when markets have tried to rotate away, and those rotations just have not gone well. So maybe this is the time where you finally get escape velocity there. Maybe this is just a little 1 or 2 week thing that ends up reverting back to tech leadership as it is today, by the way. And so I think it's just interesting to note what's happened so far this year, because it's different from the overall longer-term trend from the last 3 years where tech has been the dominant force, and anytime we've tried to do something else, hasn't actually been great for markets once you get past, the initial wave of excitement.
I'm trying to think this through. Maybe more like United States of America sponsored by Google? NVIDIA presents the United States of America? Something along those lines?
NVIDIA powers the United States of America.
Yeah.
With an assist from Microsoft. The United States of OpenAI.
Yeah.
It doesn't flow well. It's
don't
not
seem
good.
that far away.
But in any case, so this is where we are as we, continue into the second half of January now. And today you've got the Nasdaq rebounding. You take a look at, why that's happening. And it's all in the semiconductor space. And this, in my opinion, is because overnight we got earnings from Taiwan Semiconductor, who is not in the S&P 500 because last time I checked, Mike, not an American company.
Correct.
But they are the dominant player in the chip-making space. And what they saw was that they are continuing to have robust orders. They are planning to invest capex of $52 to $56 billion this year. That's up anywhere from 27 to 37% from what they did last year. And this indicates they're not looking for any kind of drop in orders despite higher prices for memory chips, higher prices for GPUs and things like that. And so you've got NVIDIA up 3% today, AMD up 5%, Micron up 3.5%. Broadcom up 175, and that's powering the market today in a world that otherwise is kind of okay. Everything's fine, but it's really tech and semis in particular that are leading the way today.
So, again, TSMC, the space that they occupy, they actually make this stuff. NVIDIA might design it, Intel or others might design the chips that go into your iPhones or your data centers, more the data centers these days. TSMC actually assembles these things and gets paid to do so. So, this is a few years old now, but as a few years ago, Apple was their biggest customer by far. NVIDIA possibly could have surpassed that by now, but when they are chugging along, I guess my point would be it'd be rather surprising if they weren't displaying results like this, given what we are seeing from the likes of NVIDIA. And like we've said from the likes of NVIDIA, this would not be an early warning sign of excitement about the AI industry dissipating. This will be one of the last things to turn because the orders for these things are backlogged and they are manufacturing them as quickly as possible. But when a company like this speaks to optimism about, hey, we're going to expand manufacturing, we're going to have $56 billion in CapEx this year, it speaks to still that ongoing excitement about the AI industry.
And again, it doesn't mean that everything is all clear. It doesn't mean that everything is fine because, remember, think about this in terms of the financial incentives. If you are Taiwan Semiconductor, and right now you've got companies lining up to give you money. There's a phrase that was instilled at me at an early age, which is you only get so many bites at the apple. And you don't know if those orders, if you say, look, we're not going to increase capacity, those orders could go to a competitor. They could just disappear into the ether and never actually occur because it takes too long to fulfill them. And so if you're Taiwan Semi, the incentive is, hey, we operate in a space that is just a wee bit secular. Cyclical. I like secular, though. It's a good one that describes the AI space, isn't it?
Yeah.
It's a secular space right now. So it's a cyclical business where you have these huge boom and bust cycles in chip making. And so if you are Taiwan Semi, the financial incentives for you are, hey, yes, we're in a boom and bust industry, but if the boom's happening, we've got to participate. As what's his name? The CEO of Citigroup back in 2006, 2007. His last name was Prince. I can't remember his first name off the top of my head. He said, look, if the music's playing, you got to keep on dancing.
Artist formerly known
also Prince.
Also Prince.
Yes, the CEO formerly known as Prince. So I think that when you look at this, I understand the incentives, but it's also you're not going to see the first signs of trouble here.
No.
The first sign of trouble is going to finally be big tech companies, Microsoft, Gemini, Meta, Amazon, like you go down the list, it's going to be them saying, you know what, we're going to scale back our CapEx plans, and that's when Taiwan Semi goes, oops, our bad. So this is not unexpected. I think it's what you would expect to see. It's giving some optimism to chip stocks that have kind of had a hard time achieving escape velocity recently. You know, you look at NVIDIA just as an example. NVIDIA has been between 170 and 200 basically every day since mid-July, aside from a late burst in October.
Yep.
You know, NVIDIA's basically been flat for the last 6 months now. You take a look at Broadcom, and Broadcom in the same boat. They've been between 320 and 380 since early September, with one little burst above in December. Basically flat for 4.5 months now. Micron, the outlier, and this is because Micron occupies a different niche where they are selling the memory that helps to power these GPUs that NVIDIA makes, and because they're basically the only game in town, the memory prices are going bonkers. If you want a sneaky, scary prediction for this year based on it, Apple either likely has to significantly raise iPhone prices for the next cycle, or their margins are going to take a hit. Because there's basically one or two games in town when it comes to memory, and they all are able to charge stratospheric prices right now. If you've had to buy a computer in the last year, you see this and you know this. AMD, you take a look at them. They've been between 195 and 230 since the beginning of October. Again, 3.5 months, no real movement. So I think the story here is, hey, these chip stocks, these semis, are looking for that story to give them the next leg up. This here keeps them from taking a leg down, which is good, but it still is, these are range-bound companies that have yet to figure out ways to convince the market, hey, it's time to move us meaningfully higher the way that we were doing from mid-April through, August of last year.
Bringing us back to your question earlier, of all of us, you should know the name of the Prince City CEO.
Chuck?
Yeah. Charles. Goes by Chuck.
Sorry to hear that. Let's take a quick break here. When we return, let's talk a little bit about Goldman Sachs and their CEO who's back from his DJing gigs and has them cranking out some M&A activity and trading revenue right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001. 001 or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mike, we had Goldman Sachs report their earnings for Q4 this morning, and guess what, Mike? They had a record for trading revenue from a Wall Street bank. $4.31 billion in trading revenue. Again, that's not their whole piece for, all of their revenue overall. But, look, trading is, just cranking along at all these investment banks. Morgan Stanley's seen a big uptick in the last year or two. JP Morgan, aside from the last quarter, in the same boat. And so that continues to be a major driver of quarterly activity right now.
And for Goldman, at least, it's a return to what they are tried and true good at: investment banking, speculating in markets, market making. They had this foray into issuing credit cards. It went extraordinarily poorly. It was kind of fun for them to be at the butt of the jokes, but now they are back to the serious stuff that just makes them oodles and caboodles of money. And they had a pretty good quarter in the fourth quarter.
They did. Anything else to add?
No.
I got nothing.
To be clear, with all of these banks, even people who pay pretty close attention to it, when they report their earnings themselves, people aren't all that interested in what the actual results were. Most people, when they are tuning into what's going on at bank earnings, they're there for the earnings call to hear what the CEOs are talking about the state of the financial markets and the state of the economy, because they tend to have a pretty good read on that. When it comes to how much investment banking revenue did you make, or how much did you take in loan loss provisions. Unless you are a banking analyst, there's not a ton of interest in that data point. And certainly none from me.
Yeah. So do we want to say anything about Morgan Stanley's earnings?
I think it's so the one piece of it that's interesting is that they made a boatload of money on the AI trade.
Good. So did everyone else.
Yeah, so did everybody else. The reason that they made it is because they are the ones issuing the debt to fund the building of this AI stuff. So we talk about how the tentacles of the AI trade are making their way into lots of different areas of the economy. That does include major banks like Morgan Stanley, Goldman Sachs, and others.
Yeah. Let's talk a little bit about BlackRock's earnings, because I do think there's some interesting stuff in here. They reported this morning as well, and they pulled in $342 billion in new assets under management, and the firm now has a record $14 trillion of assets under management. Their exchange-traded fund business that operates under the iShares name has $5.5 trillion of that. And so on a net basis, investors adding $268 billion to their long-term investment funds, with about two-thirds of that going into ETFs. And so, again, they just continue to be an absolute juggernaut in terms of what they do as far as, attracting new assets. The piece that is a little bit problematic to me about these giant asset managers, BlackRock, Vanguard, would those be the ones that you'd point out the most, Mike?
Largest asset managers out there would be, I don't have the numbers on me, but BlackRock, Vanguard, American Funds, which is Capital Group, and Fidelity Investments. Fidelity's not public, though.
So each year on some kind of fixed schedule, a lot of these guys, they go through and they say, okay, for our funds, how do we want to adjust the expense ratio on them for, what investors pay?
Sure.
And we've reached the point now where, because these guys are so big, the adjustments they make are like, hey, we're reducing this fund from 0.05% to 0.04%. And I'm going to say something now that probably is counterintuitive and maybe even a little bit unpopular. But I think we've reached the point where these large fund families reducing their expenses in this fashion produces no tangible benefit to investors anymore, and only serves to crowd out competition because no startup can compete with those prices. What I mean by this is, when Vanguard and BlackRock were new to the low-cost investing game, it was, hey, if you wanted to go out and have a mutual fund manage your money, it was 1.5% to 2% a year, and Vanguard and BlackRock would come in and be like, no, we're 1%, and then mutual funds chased them down, and they went down to 0.5%, and then 0.25%. And there's a big difference in long-term returns if you look at paying 1.5% versus 0.25%. There is no meaningful difference in long-term returns if you're paying 0.04% versus 0.05. It is not going to be a driver of any significant extra performance that you get. Just the math doesn't work that way. If you compounded an extra 0.01% for 30 years, okay, great, you ended up with an extra 0.5% by the time you're done compared to what you would have had otherwise. That's not going to determine whether your financial plan is successful or not. But what it does do is it makes it harder for the new startup, cool guys investment company to come in and compete, because they can't start with their prices that low.
No. Which is why they don't, and which is why there is no competition, for instance, for a ETF that aims to mimic the S&P 500.
The problem is that even the supplemental stuff is getting so cheap that it's hard to get into now. And again, I'm not saying that it's good for investors in that, hey, other things other than just S&P 500 ETFs are getting cheaper. The bad news is that we're losing competition that might have a better way of doing things.
Yeah.
Quick break here. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets,
and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are bouncing back after yesterday's losses, driven by a rebound in the tech sector on the heels of impressive quarterly results from Taiwan Semiconductor. Wall Street's also sifting through more bank earnings and better-than-expected jobless claims data. Right now, the Dow is up 0.2% or 312 points higher. S&P 500 also up 0.2% or 42 points higher. Nasdaq up nearly 0.9% or 203 points higher. Russell 2000 also up over 0.2%. 10-year Treasury yield is up 1 basis point at 4.15%, and crude oil retreating over 4.5% now, trading just above $59 a barrel. Taiwan Semiconductor shares are jumping 6% after it posted another record quarter, where it saw a 35% increase in fourth quarter profit amid demand for its AI chips. Other chip makers are also seeing gains on the day in reaction to those results. Meanwhile, BlackRock posted stronger than expected earnings, although its profit fell. Goldman Sachs also beat earnings forecasts and posted record annual revenue, where Morgan Stanley's profit and revenue beat expectations. All three of those banks are jumping 3% higher on the day. Spotify announced it would raise its subscription price $1 to $12.99 a month. Shares in the audio streaming and podcast company are down 2% on that news. Barclays upgraded Dell Technologies to overweight from equal weight, citing the strength of Dell's AI server orders. Dell shares are rising nearly 4%. And Boston Scientific agreed to buy Penumbra for $15 billion in cash and stock to bolster its cardiovascular portfolio. Boston Scientific shares are down almost 5%. I'm Tucker Silva, and that is Wall Street Watch.
Mike, there's a piece in the Wall Street Journal. It's not time to dump Megabank shares just yet. And this gets at something else that we were talking about yesterday, which is that through yesterday, a lot of the big financials had reported, and basically they've all gotten bopped on the head by Little Bunny Fufu.
Yeah.
And today you had, a couple more big financials that reported, but more not big diversified banks. You're talking more capital market focused businesses in Morgan Stanley and Goldman Sachs.
Sure.
But this piece is more talking about your JP Morgan Chases of the world, your Bank of America, your Wells Fargo, Citigroup, and it lays out the case, okay, these haven't done well to start the year, but maybe things are, a little bit overdone in terms of selling them off. And look, sure enough, they've bounced back today in trading, but I don't have any convincing view on these big banks. And the reason why, to be honest, is that by and large right now, since the great financial crisis, they're one step away from being, regulated utilities, basically. And so you kind of look at it and you're like, there's limited opportunity for you to actually go out and make new money. And ultimately, we know we're going to bail you out if things, really, go to a nasty place, because we already have, and these are only more concentrated relative to where they were 20 years ago. So I never have any interesting thoughts about banks, because
they're regulated utilities. Yeah,
they're kind of quite honestly, none of them really do anything different from each other. You're basically conducting your banking with the U.S. government, just with a different logo on it.
Mm-hmm. Yeah, there's very little differentiation, especially between a few. Wells Fargo, Bank of America, JP Morgan Chase. Walk into a branch and tell me what's different about them other than the colors that you see.
Yeah.
You can get a financial advisor there. You can get a CD there. You can get a mortgage, and you can get some cash. They're effectively the same thing. You notice some differences when you go into your smaller regional bank. There might not be the financial advisor. There are some differences there. But if you place yourself in, Southern Connecticut, where all three of these operate, you really won't see much of a differentiator between them. And so I hear you. I also think it's fair, like you mentioned, what happened in the first 15 trading days of the year for any segment of the market is not relevant to what it's going to do for the rest of the year.
No.
If you want to be really optimistic, there are potentially a bunch of very large IPOs that are being floated out there, and guess who's going to assist them in going public? These guys.
So, yeah, that's kind of what we have going on there with banks. Let's talk a little bit about weekly jobless claims. We got this data this morning at 8:30 a.m. We saw weekly jobless claims decline further in the last week, down from 207,000 to 198,000. Continuing claims dropping a touch as well, from 1.903 million to 1.884. And this is something where we continue to see, despite a slowing labor market in terms of the pace of hiring and net job additions, you're just not seeing anything here that is concerning in terms of either new or continuing jobless claims.
Yeah, it's pretty wild, isn't it? I mean, just to see the pace of the increase on the unemployment rate without seeing this uptick here, and this has been consistent over the last few years here. Maybe it's not incredible, but the sentiment that I keep hearing from employees is, I'm really worried about losing my job. I know somebody who has recently lost their job, and so the term job hugging has made a appearance over the course of the last 6 to 9 months, where employees are pretty nervous about switching and are getting back into the office and doing what their employer is asking because they're nervous about this. But it's not something we are seeing reflected in any sort of data that there's any sort of increase in layoffs. In fact, the data kind of indicates the exact opposite, that we're at a pretty historically low level of filings for unemployment right now.
Yeah, so I think that, when looking at this and trying to make sense of it, the other piece that I did find interesting that someone brought up to me today for the first time is, we've talked about the demographic changes and how they may be influencing like the break-even level for job creation, where, hey, because of reduced immigration and increased deportations, maybe you only need 20 to 50,000 jobs added a month for the unemployment rate to not go up.
Right.
And I've always thought about it in that context.
Sure.
But the other piece is, hey, because of changes to how the population is growing, how much does that impact continuing jobless claims as well? Like that, it's another, they're all related in that fashion. And so I hadn't thought of it in that context. So Guy Berger, who works for the Burning Glass Institute is Guy Berger.
We guess how his name's pronounced every day. And
no,
never
I found it out because I finally listened to a podcast with him
did?
on it, and it was Guy Berger.
Oh, okay.
But we can call him Guy Berger if we want.
Yeah.
In any case, his estimate this year is that continuing jobless claims on average should rise about 4.2% year over year, which is a slight deceleration in the pace of increase from around 5% last year. So he's still expecting to see continuing jobless claims ticking up slowly year over year, but at a better pace than last year. And again, still a sluggish labor market, but not one that spills over into something catastrophic. Let's take a quick break. When we come back, 7 signs you need a financial advisor in 2026. We'll discuss them next.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Mike, we got a piece of Market Watch. 7 signs you need a financial advisor in 2026. What are they?
Yeah, sometimes these things are silly. I don't think these are too silly. These are pretty good. So they outline 7 of them. I'll go run through them. You don't have clear, detailed financial goals. You don't know if your portfolio will help achieve those goals. You don't fully understand what it will take to retire. You don't have full confidence in your own financial decision-making. You let emotion dictate too many money decisions. These are 8. They gave us 8 and said they were going to give us 7.
Did they?
Yeah, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, you don't have the time.
No, there's 7.
That's why it says 7.
Oh, sorry. The last one is how to find a financial planner. That was I just read all the bold things. You don't have the time and or financial know-how
counting as a financial advisor
to deal on your own, and you don't know if your family will be taken care of if something happens to you. These are all fine and well and good. The only problem, as I see them, is depending on which one of these applies to you, you might need a very different type of financial advisor than any of the other ones.
And they also require an awful lot of self-awareness to be able to, like, when's the last time you actually had someone say to you, I'm too emotional about investing, I need someone else to do it?
Yeah, never. It's just like when you ask people if they're better than the average car driver.
Yes. So I think that the place that I get to is just kind of like, I view a financial advisor the same way that I view a doctor, in that generally, like, quite honestly, for like large portions of your life, you don't necessarily need one because there are relatively simple things that you need to do. But the problem is that when you do need one, you want someone that you've already been working with who understands the history and how you got to that point.
Right. I was speaking with somebody the other day who loves doing investments, but knew nothing about how those investments were affecting their tax plan or overall retirement strategy. And so, like, that person might need a financial advisor, probably doesn't need an investment advisor. And those two things oftentimes get paired directly together, and you don't really have the choice to choose one versus the other. But that's where, asking some basic questions can help. When it comes to that uncertainty around, confidence in your decision-making process, I guess I would just ask myself, hey, is there anything that I can point to in my investment portfolio that I view as a real, like, looking back on it, as a very critical mistake in my decision-making process? Not mistake in, like, the results. Plenty of us have that in investments. Like, I bought the wrong stock. It didn't go the direction I thought. That's not what I'm talking about. But I made a decision that I, in hindsight regretted because it was charged with emotion. If you've done that, then you're kind of in that category, even if you don't think you'll do it again. The other ones that I just see, and I've spoken to people that I know personally about this, it's like, if finances are making your relationships difficult, right? Like, you and your spouse, you and your husband, or you and your wife are arguing about the right direction of your finances, or, not on the same page about something, also great reason to have, an independent financial advisor who can sit with you and actually give you their opinion. They're not trained as, marriage counselors or mediators, but they can actually, sit there and be an objective force to say, this is kind of the right path to be on, and this is where you need to get to. If you're falling into that category of just, hey, I'm uncertain about where this goes, or money matters are becoming a problem in a relationship, these are all indications that, hey, it might be a good time to at least sort out what people do when they provide financial advice and what different types of financial advice is out there. It runs the gambit, and the guy working at the giant bank that only caters to 10 million plus of investable assets probably is not the right person for somebody who is got 2 kids in college and trying to figure out which is the best path for student loans. If you have questions about your financial future and you're trying to figure out how to find an financial advisor that you can work with personally, please give us a call at Armstrong Advisory Group so we can give you a free assessment of how we work with our clients and how it might fit with your financial plan. The number is 800-393-4001. You can book time for us to call you back at armstrongadvisory.com, or call us now at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. Should we talk about private markets going into 401k plans, or the rise and fall of Fenway's timeout market?
I don't know. I guess I've been to timeout market, whereas I haven't been to a family office as of late. So let's go with timeout.
Unfortunately, appropriately named, as it looks like timeout is going to be, closing.
Permanently.
January 23rd, which is 8 days away. 27,000 square feet that had 15 vendors. And basically, those vendors have now been told, hey, we're going to be shutting our doors, largely because revenue fell 20% last year, even as operating costs climb. And if you know anything about the restaurant business, which, again, I know just enough to be dangerous, it is a low-margin, high-effort, high-capex business that is just going to, again, be absolutely incredibly tough to compete in. And so just seeing a 20% fall in revenue, even without even without costs moving up, a 20% drop in revenue is often enough to shutter many restaurants. And even though this is a kind of group of vendors that operate within a single space, this is going to be closing as well. It's not unique to the Boston area. They also announced the closure of their Chicago location on Wednesday, and their Miami location closed in 23. So the only one that they're going to have left in the U.S. Is now in New York. And so just kind of a failed expansion that just never really was able to take off, I guess.
It's a really cool concept.
Yeah.
You go, you've got seating in the middle. There's 7 or 8 different food options. I took my kids, but I'm part of the problem here. I took my kids in 2021 and haven't been back. So I think what they're experiencing is the same thing that a lot of places that appeal to workers in the area, those types of restaurants, which this definitely was. I mean, that's not why I took my kids. We were seeing a Frozen Fenway hockey game, and we parked there, went and grabbed food, and then went to the game. But a lot of their business was to appeal to the lunch crowd at the offices in the area. And guess what? The offices in that area are still not where they were in 2019. So this is not unique to this market. It's not unique to the city either. It's something that they're seeing in their locations really across the country.
Yeah, and part of me wonders just if the location was an issue here because, again, it's kind of down near Fenway Park.
Yeah.
And you get a lot of kind of sports you get a lot of sports fans near Fenway Park for obvious reasons, and one of the vendors suggested at one point airing, Women's World Cup and Red Sox games on their projection screen TV, and was told, no, that's not what we do here. I'm just not sure they read the market right for that location.
Yeah, high-end sushi when everybody wants to watch the game, and
high-end sushi while watching a game could be a thing.
Sure, but they didn't combine those two, so I'm with you there.
No. So, again, disappointing, and this is going to be closing in 8 days. I don't think we have any word as to whether anything is going into that space right now.
That's what I was going to ask.
It's a massive space.
27,000 feet is not small. I mean, think of it this way. The average grocery store generally runs about 30 to 60,000 square feet, so you're talking something that typically could house a grocery store, a smaller one, but that's the amount of space you're talking about. So
probably a grocery store?
Well, when you put it like that, Michael.
Seems to be the perfect opportunity.
Let's take a quick break, and when we come back, we got hour 2 coming up. We're going to be joined by Michael Santoli from CNBC during that hour. Make sure you stick around.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit, and you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's 2 of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001, or request the guide online at armstrongadvisory.com. TSMC.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the elder law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and as we kick things off, markets are rebounding from yesterday's Womp Womp Day. The S&P 500 is up 45 points, about 0.2%. The Dow Jones Industrial Average up 377 points, or about 0.75%. And we've got the Nasdaq bouncing back as well. Nasdaq Composite up 214 points, a little bit less than 1%. And the Russell 2000 continues its strong start to the year, up another 1% as well, as it has been outperforming all of its larger, more celebrated brethren through the first couple weeks of the year. 10-year U.S. Treasury up 2.2 basis points to 4.162%. Dollar index up 0.27% to 99.17. Gold is down $15.30 an ounce to $46.20 and 40 cents. And crude oil, West Texas Intermediate, sliding over 4%, down $2.75 to $59.27 right now. This on the back of President Trump late yesterday, indicating that he believed that Iran was cleaning up its act, I believe was one of the terms used, and so maybe no military force needed by the United States. Obviously, these things can evolve quickly, and so we'll see what continues to happen there. But the story that we're going to kick things off with today is in Barron's. And the headline is very simple. The world is a dumpster fire. Why the stock market doesn't care. And couple things. The first thing that we need to ask, okay, is the world actually a dumpster fire? In the metaphorical sense, obviously it's not a literal dumpster fire. Otherwise, you and I would be, Oscar the Grouch broadcasting from a flaming dumpster.
Sure.
But I don't think the world is a dumpster fire. And what I mean by this is every single point in time has all kinds of crazy crap going wrong in it. And I pulled up the Wikipedia page for the 2010s, which they have one. And I was like, oh, great, like the 2010s. And, just to talk about the stuff that was going on then, and I'm going to just go in the order that they have different categories listed. Major international wars. You still had the global war on terror that was in place. So obviously, you had U.S. troops that were still fighting abroad in a number of instances. This, kind of culminated in the 2010s with the rise of ISIS, which I don't think you can, really look at a world in which, ISIS was starting to rise and be like, not dumpster fire, and then look at today and be like, dumpster fire. Just if we're talking about, different things. Russia, in 2014, also annexed the Crimean Peninsula and was waging war in the Donbass. Same as, basically the same conflict that we are seeing today. The Saudis and Yemenis decided, hey, we're going to have, some direct conflicts and a bunch of proxy wars in the Middle East as well. Syria completely fell apart during the 2010s. Again, you had the Arab Spring movement throughout the Middle East and Northern Africa as well. So, you had all kinds of internal political revolutions that were going on.
You had Brexit. You had the Greek debt crisis.
Michael,
I won't skip
not
ahead.
Done. Yeah, okay, fine. Yes, you had Brexit. You had Greek debt crisis. This is before you even get to disasters and things like that. The Haiti earthquake that killed 250,000 people. You had. Does everyone remember a little thing called Fukushima? There's a reason why France decided to shut all of their nuclear power plants down. Might not have been the right decision, but it was because people were nervous about, nuclear power after the earthquake and tsunami near Japan. You had, dozens of other major earthquakes. When we talk about non-natural disasters, I mean, some of the stuff that you saw in terms of, whether you're talking aviation disasters, there were a whole bunch of them, including, 2 planes, I think, that were shot down in 2013 and 14, another one that just went missing. You had all kinds of issues with hurricanes over the course of the decade, and this is before you even get to, just a lot of, agita that everyone had about, local and internal politics and stuff like that. So the point that I'm making is the same one that I come back to all the time, which is, yeah, if you look back in hindsight, if you're one of the people who's lucky enough to have lived through any of this stuff, you look back and you're like, oh, well, we survived and it was fine. But at the time, things were a little nuts and you didn't know how it would work out. Even in situations where you're successful, by the way. You hear people look back and they're like, well, the U.S., the U.S. survived the Civil War. And it's like, well, actually, a lot of people didn't. So these things, when you're going through all of them, it does feel like there's a lot that's on our plate as far as what's going on in the world. But that's kind of the natural state of the world. I wish it weren't. I wish things were different, but that doesn't change anything. The fact is there are always things going on that can make the world seem like a crazy place because it kind of is. And I think part of it is just we have way more access to information now than we ever have, even more than, 4 or 5 years ago. And so it's something where we just see all the stuff that's going wrong at a level that we didn't previously. I mean, if you had freaking Twitter during World War II, there'd be some guy on Omaha Beach standing there, a French dude being like, hey, I see all these boats coming in. What do you think that is? And maybe things would have turned out differently, unfortunately. So
yeah, information and disinformation in today's society may be more of what's to blame here. I mean, the Russia-Ukraine conflict, war, invasion, first real military action that has just been almost entirely live streamed. Never in history have we had something akin to that. And I'll admit, it does seem that we are more politically divided, at least in the United States, than ever. But I don't know how you measure those things. I don't know how you measure if we are, in fact, more politically divided. And so I think that media and social media particularly might have a lot to do with that. But even if I could compile an index of geopolitical tensions and put us on a chart somewhere, and even if it turned out that we are in a moment of particularly high geopolitical tensions, I'm not sure that the stock market would have cared historically. So I guess that's my answer is there have been plenty of moments that are quite dumpster fire-esque, and markets haven't historically cared a whole lot.
We should create a dumpster fire index. And I don't know what we would do with it, but it would be fun to look at.
Yeah.
Let's take a quick break here. When we come back, we're going to be joined by Michael Santoli from CNBC. We're going to talk a little bit about what's been moving in markets to kick off the year right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
As promised, we're now joined by Michael Santoli from CNBC, here to talk about what's been moving in markets. Michael, thank you so much for joining us today.
Oh, glad to be with you. Thank you.
It's been a little bit of a complicated market to get a read on to start the year. It's only in the last couple of days that I feel like I'm starting to get a handle on it. What have been some of the key themes in your mind over the first couple weeks?
I agree with you that it's been very active with a lot of sort of cross currents. Some of that is just normal kind of first of the year, new flows. Last year's winners come under pressure. Last year's laggards get bought. But I think broadly speaking, the theme is the market is broadening out from the kind of narrow leadership of the AI trade. Largely that has been, as investors position for a reacceleration in growth in the first quarter of this year for the U.S. economy, is a massive crowded consensus that this is about to happen. I mean, the fiscal story is part of that, but I do think we've kind of paid up for that trade in advance in the latter part of last year and then the early part of this year. And I think the AI piece of it is, Mag 7 pulled forward a lot of the ways we wanted to capitalize on the big AI themes. And now the AI excitement and the fast money has moved to Asia, where the memory chip and Chinese IPOs are flying, and also down into the other food chain players below, the NVIDIAs of the world and Broadcoms. That's largely speaking where we are. I think all that's got to get tested now. You're also seeing some oddball stuff like yesterday and the day before. Consumer staples, which nobody wanted last year and have been hated and underowned, rip. Why is that? Probably because big quant funds don't own enough of it, and it's kind of a pain trade. So it is a little bit dicey. Interestingly, the S&P 500 is basically, as it closed yesterday, where it was in late October, but the average stock is up, banks are up, industrials up. So, it's kind of going according to that script.
So this is where I have to, I got to douse some cold water on this and get your opinion on it.
Yeah.
The last couple times that the market's tried this broadening out, summer of 24 and spring of 25, things didn't end particularly well. Is it different this time?
I don't know that it's proven it's different. I'm with you, by the way, in general. I constantly for 2 years have said a broader market is not a safer or more rewarding market. Okay? What it is it's professional stock pickers who believe that they're fighting against an unbeatable S&P 500 when the market's narrow, like the idea of a broader market, because in theory they have an ability to kind of pick the better stocks and have more hunting to do. But I do agree that without the sponsorship of the heavy market cap names, and the fact that this is an AI bull market, okay, it started over 3 years ago because of AI. We kind of jumped the gun on that. It's very unlikely that we have a wholesale passing of the baton to a different kind of stocks leading the way in a sustainable way and have the index perform very well. So I've been like, fine, you want a broader market? This could be what it looks like. S&P does not much of anything in the best case scenario. The average stock outperforms for a phase, but I don't know how far that gets you, because if you want to meet the consensus S&P target for the end of this year of like 7,600 on the S&P, it's like everything but the Mag 7's got to be up 20%. Right? It's just the only way the math can work.
And let's talk about those Mag 7 names, because I was looking at a lot of these charts this morning, And NVIDIA's basically been range-bound for the last, 6 months now. Microsoft has been in a steady decline since August. Meta has been, steady decline since August as well, punctuated by a couple sharp moves. It's just not pretty there. How do these stocks get out of their funk, and can they get out of their funk the same way they did last April?
I think the bull case is that even within the Mag 7, it's been a story of rotation. Obviously Alphabet's been carrying way more than its weight in getting that part of the market to stay supported. Broadcom, basically is the eighth in the Mag 8. I mean, you can't, only by circumstances is it excluded. That's been a strong stock. And then Tesla just does its own thing, and it's kind of random, and it's not really connected to all the AI themes, but it's sort of held in there. I don't know that there would be a catalyst aside from this general impulse, and this is the way the market's traded. It seems collectively investors want to stay fully invested. Exposures to equities are very high right now across all types of investors, and yet they're just willing to grab at the last thing, the thing that seems kind of underexploited or due to bounce or something like that. I find it fascinating. Microsoft just cannot get out of its own way. It's a proxy for OpenAI. If we decide that this is kind of zero-sum game stuff in AI and OpenAI doesn't have the juice, there's a lot of stuff that's going to have to, be repriced for that. So I do think that's kind of sort of a fascinating dynamic. I don't know that we can extrapolate what's happened from here, but it is quite interesting. I think we all have to keep in mind what happened in the Alphabet versus Meta trade like 9 months ago.
Yep.
It was kind of like a 180-degree switch almost overnight.
I want to talk about two other markets that are kind of moving in opposite directions. The bond market hasn't really done much of anything for 5 months, despite all kinds of headlines on labor, inflation, and the Fed. On the other hand, you've got precious metals markets that are just going absolutely nutty for the last 2.5 months now. Are they basically acting as the release valve for any of these concerns, or is there something else afoot here?
I think that's a good assumption, is that they actually are acting as largely the release valve for global concerns about overdependence on U.S. treasuries or U.S. assets, global concerns about general fiscal overextension by governments, and therefore, if you're a large investor, I think people have decided that they prefer, gold plus some other commodity stuff as a greater part of their portfolio ballast than government bonds, right? You're always going to be making more government bonds. They're not going to be making as much more of the other stuff. I also think it's obviously become a momentum trade. We know central banks are price-insensitive buyers. They're buying more gold and not buying as many treasuries. So it is interesting that that's where it's gone. Silver is just sort of like the manic little brother of gold, and it becomes very speculative very fast, and it's gotten completely, overplayed, but we'll see how that goes.
Fantastic. Michael, appreciate you joining us, and hope you have a great rest of the week. We'll catch up soon.
Great. Appreciate it. Thank you.
That is Michael Santoli from CNBC discussing markets.
All right, time for trivia here on the Financial Exchange. And on this day back in 2009, Chesley Sullenberger landed U.S. Airways Flight 1549 on the Hudson River shortly after takeoff from LaGuardia Airport in New York City. All passengers and crew survived in what became known as the Miracle on the Hudson. So, trivia question today. Which actor portrayed Sully in the 2016 movie Sully? Once again, which actor portrayed Chesley Sullenberger in the 2016 movie Sully? Be the eighth person to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the eighth correct response to text us to the number 617-362-1385, along with the keyword trivia, will win that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
Let's see. What do we want to talk about here? Let's talk about this Verizon outage from yesterday.
Oh, yeah, that's fun. That was great.
Do either of you use Verizon?
Yes.
Yep.
Both of you do?
Yeah. I noticed I had the old SOS. Couldn't
Is that
get a
an
signal.
iPhone specific thing?
I think so.
Okay.
Yeah.
It uses Morse code when you can't do anything else.
No signal whatsoever, so I just assumed it was my phone, so I left here, and it was like hour 2 of not having any cell signal, so I just stopped off at Apple on the way home. I was like, hey, what the deal, man? And he was like, yeah, Verizon, they got an outage. And I was like, oh, okay, neat.
Yeah, so it affected all sorts of stuff. If you, we in our company use DocuSign to get into DocuSign or any other multi-factor authentication, you need to receive a text message. Those weren't working. And then I received like 4 or 5 text messages towards the middle of the night last night from people who had clearly sent them prior to.
Right.
I got to tell you, it's not really reassuring that simply having like one cell network go down can be as disruptive as it was.
Did you see the map?
What map?
Of the U.S., of the outages.
Yeah,
it was primarily East Coast focused. I mean, Chuck, you bring up a valid point. There are 3 providers out there. Everybody else runs off of those towers of those 3 providers.
If I'm just trying to think of this from a resilience perspective.
Not great.
If the U.S. economy is dependent on those companies to function, it's not great. Quick break. We got Wall Street Watch and the trivia next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are bouncing back after yesterday's loss, driven by a rebound in the tech sector on the heels of impressive quarterly results from Taiwan Semiconductor. Wall Street's also sifting through more bank earnings. Right now, the Dow is up 0.8% or 402 points higher. S&P 500 up 0.2%. Nasdaq up nearly 0.9%. Russell 2000 now up 1.3%. 10-year Treasury yield up 1 basis point at 4.158%. And crude oil retreating 4.5%, trading right above $59 a barrel. Taiwan Semiconductor seeing gains of 6% after it posted another record quarter where it saw a 35% increase in fourth quarter profit amid demand for its AI chips. Other chip makers are also seeing gains on the day. Meanwhile, BlackRock posted stronger than expected earnings, although its profit fell. Goldman Sachs also beat earnings forecasts and posted record annual revenue, and Morgan Stanley's profit and revenue beat expectations. All three stocks jumping over 3% higher. Spotify announced it would raise its subscription price $1 to $12.99 a month. Shares in the audio streaming and podcast company are now down by 3%. And Barclays upgraded Dell Technologies to overweight from equal-weight, citing the strength of Dell's AI server orders. Dell shares are up about 4% on that news. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which actor portrayed Chesley Sullenberger in the 2016 movie Sully? That would, of course, be Tom Hanks. David from Edgartown, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to David. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Can I ask a Spotify question?
Sure, go for it.
Why do they not just triple their price?
I would leave.
Yeah, that's a lot.
So I get emails from
say that.
I get emails from Amazon every day saying, "Hey, you can listen to podcasts here. You're already paying this in your Prime membership." I used to have Pandora. I think that that is not as sticky as maybe you think.
The reason why I think it is sticky is twofold. Number one, as someone who has switched music services once in the past, it sucks. Like just trying to rebuild what you had at the other place.
Yeah.
It's like, okay, I've got to get my playlists rebuilt. I can't remember what I had in my library. It's just a slog. Number one. The other piece that I think Spotify has at this point are the network effects.
Sure. Yeah, they do have their own dedicated stuff that you can't get elsewhere.
And just like your friends are on it, they make a playlist. Like you listen to that playlist. Like you can listen to that playlist and share it and stuff. What's that?
Do you do that? I
got a couple.
Never do that.
I got a couple saved playlists. Yeah.
Yeah. Oh, definitely. Yeah. So I think. I don't know. If I were running Spotify, and look, there's probably a reason why I'm not. Probably many. I would just be like, you know what? We're going to raise the price to $40, and that's still pretty cheap each month for access to all the music in the world.
I understand your point. I think that's being aggressive, but if Spotify came out tomorrow, like they said, hey, we're going to be the same price as Netflix, I'd still stay on.
Would you?
Right, like this. Maybe I was a little too aggressive, but like
$19.99 a month. I'd do that.
You're going to raise the price $1 a month, man. You only get so many bites of the apple. Raise it $5. I'm not saying this is like good for consumers or anything, but I think like people just be like, okay, that's how it is, because that's what they've done with Netflix, by the way.
Yeah. Maybe they occupy that space for more people than I realize. I would make a switch. Only because I've had Pandora before, I was really happy with it, and I made the switch because I wanted more podcasts.
So you're saying you opened Pandora's box?
I did, yeah.
Oh, cool.
Yeah, I did. That's precisely what happened, actually.
Yeah. Let's see. What do we want to talk about now? Food prices or manufacturing?
I do want to talk a little bit about food prices, because this is obviously top of mind for everybody, and I think throwing some data behind it is useful. So the main source that we go to for food prices, specifically food at home, so grocery prices, is the Consumer Price Index. They have data on this going back to the 1950s. So, like, pretty nice data set to look at. For some context here, I'm annualizing all this. The highest rate of increase that we've got at grocery prices in recent history came in August of 2022, when food prices were up for the year over 13.5%. The only time in U.S. measured history that we have, going back to the 50s where it was worse than that, was the early 70s when they were up 23%. But it has calmed down quite a bit from those highs. If we take a look at food prices in 2024, just calendar year 2024, they were up 1.7%. I think the problem is, one, nobody thinks about it this way. They always think about it compared to what they bought 5 years ago in their grocery bag. Two, that pace of change has bumped back up again. So for 2025 calendar year, we're now up to 2.4% increase. And so this has shifted in the wrong direction for, I mean, a number of different reasons that I can think of off the top of my head. You have cattle, meat prices through the roof. You have a weakening dollar, so those imports are costing more, and you've got tariffs on some of these products as well. So it is trending in the wrong direction as of late.
The big thing is, and I come back to this all the time, with the vast majority of this, the president and Congress don't really have anything to do with it.
Absolutely not.
Like I said this during the Biden administration. I say it now during the Trump administration. The president has nothing to do with beef prices. Like the president has nothing to do with lettuce being up 7.3%.
Yeah.
You know,
and there's very little that he can do to affect that. I mean, they've been dreaming up these ideas, but all of this stuff has negative impact somewhere else, right? If you want to let in Argentinian cattle, then you're going to, ruin the domestic cattle business.
Frozen fish up 8.6%. Point me to the policy that causes that. There is none. Like a lot of this is just stuff that happens, and it's just how it goes. So I think that when you look at this, the big thing is when you look at the long-term trend. One of the big things that's been in place over the last 60 years is that as a percentage of income, Americans pay way less than they did in the 50s, 60s, and 70s. That trend has been interrupted in the last couple of years, and that's why people are stressed about food prices, is because for their entire adult lives, the general trend has been, hey, food is getting more affordable as a percentage of my income. And now, you've got that being disrupted. And I don't know how you fix this. I don't know that you can fix this because there are so many different proximate causes, and I don't think there's anything that you can do on this. But ultimately, that's why people are saying they're stressed out about grocery prices. It's not just because they're going up, because quite honestly, aside from like a couple small little blips, grocery prices always go up. You know, unless you want to count, here are the blips in the last 30 years, okay? Just after Desert Storm, just after the Great Financial Crisis, and in 2016 when Russia flooded the world with cheap energy and basically the prices of everything were, sliding down then. Other than that, grocery prices always go up. And so what we're seeing now is incomes in the last 5 years have not kept up with grocery prices, and that is why people are stressed about it. And I don't know how you change that. I have no good ideas.
No, it is largely out of the control, and again, which direction is the dollar going to go? Which direction are some of these other things going to be to break those trend lines? It's a fair question, but I think the data is useful, right? Prices for groceries are not coming down. They are not cheaper than they were a year ago.
And they will not come down.
Provably more expensive.
Like they only typically go down when something either very bad is happening or has just happened, and now you're getting, the eventual relief from that.
Yeah. The unfortunate thing is also the pace of increases is what's increasing.
Yeah.
You don't like to see grocery prices aren't ever going to go down, but you hope that the rate of increase slows.
Yeah. Yep, that's fair. Let's take a quick break. When we come back, we'll do a little bit of stack roulette.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
Mike, do you mind if I kick Stack Roulette off today?
I would love that, Chuck.
We got to talk about sports gambling.
Doozy today, huh?
We've got a problem here. So first, we've got, and I haven't been able to watch it because we've been, doing this show here. But federal prosecutors have now charged 26 people in an alleged point-shaving scheme involving dozens of college basketball players on 17 different NCAA Division I men's basketball teams, attempting to fix 29 different games between September of 22 and February of 25. So this is bad to begin with, and this is before you even get to the things like the threats being made against both amateur and professional athletes, the harassment that goes on social media surrounding them when they, don't hit, a certain prop bet that someone had made. And I got to tell you, we're kind of proving that we can't handle it.
Yeah.
And I'm not against having sports betting, being legal overall, but I quite honestly think that the mobile apps should not be allowed because A, it just makes it too easy for you to fall into a very bad hole, and B, it enables this behavior when you're able to basically tweet at the same person that you're betting on the same device. That's just a little not great. So look, if you want to gamble on sports, I think you should have to go to a casino that has a sports book. And other than that, I think we're proving that we're not really adults enough to be able to handle it. And this goes for the prediction markets that are trying to get into this stuff too.
I was going to ask, so can you help me understand what the difference is between the NCAA's control over betting platforms versus prediction markets? Because it seemed insinuated to me that the NCAA can kind of influence what types of bets exist on a sports book, whereas the futures trading stuff, prediction markets, are just whatever you want to do, completely unregulated.
Yeah, prediction markets are they're regulated by the CFTC, the Commodity Futures Trading Commission.
Yep.
They're not part of the gambling regulatory apparatus, and so the NCAA doesn't have any direct control or influence in there. So, quite honestly, I got to tell you, I just don't think we can handle this. And I say this, by the way, as someone who, tonight, I am going to be going to a casino, actually, that has a sports book. So I'm not anti-gambling or anti-casino. I simply am of the opinion that when it comes to the betting apps, we're not really doing a good job of saying that, yes, we deserve to have access to this.
Yeah, I continue to be completely torn on it, but all the evidence suggests that you're right about it. Like, I wish we were better at handling ourselves, but this is getting pretty ugly, and it especially bothers me that the leagues themselves have literally no control over it.
They don't want control over it, Mike. There's too much money for it.
Well, clearly the NCAA wants some degree of influence here.
The NCAA, I don't think, actually wants anything. I think they want to make some noise to show that they're trying to protect their players. Yeah. Ultimately, like, I don't think they actually want to restrict.
Well, they should,
much.
Because if it continues this direction, nobody's going to want to watch a basketball game that you know is fixed.
Well, well again,
I don't want to watch a college basketball game to begin with, so I'm not a great person to poll on this. But I would suggest that, yeah, if you
quite
have
honestly, the fixing of sports is the least of my concerns. Like, as someone who doesn't bet, I don't care if it's fixed or not. Like, I know that that's kind of a weird opinion. Ultimately, like, I root for my teams, but it's entertainment. Like, if I wake up on Monday morning and the New England Patriots have lost on Sunday,
don't say that.
My life is not different in any way, shape, or form.
Mine is.
I say this having lived through, enough championships that my teams have won to know that, hey, like, it feels great and you can always talk about the ride getting there. But ultimately, like, it doesn't change my life. I'm not one of the players. I'm not one of the coaches, and I don't gamble on it. So, like, my life is no different as a sports fan. What I do know is that for the players that get harassed because some guy bet that they were going to make 8 3-pointers and they only made 7, and now he's yelling at them that he's going to, like, come find their family on Twitter. Like, what are we doing here, man?
Especially from a non-professional athlete, and I get that they get paid now, and it's a little bit different than it was a decade ago, but, I mean, you're talking about harassing 19-year-olds,
Like, you shouldn't harass 30-year-olds in that fact.
You
like,
shouldn't, but
it's
it
just
is different when it's an adult. It just is, and it's just, unseemly when I think about all this stuff.
I just don't think we can handle it. So, the fixing, like, sure, it's unseemly and everything, but ultimately, like, I watch sports to see great athletes perform, crazy feats. If they win or lose, like, again, I say this as a big sports fan, but, like, I've just found it doesn't affect my life that much. Like, it doesn't solve my money problems that I might have. It doesn't, help me communicate with my
Patriots
kids.
winning fixed my marriage.
Like, right, things no one has ever said for
2011 Bruins championship. 2011 Bruins championship helped me lose 15 pounds. Like, yeah, you're right. No, you're right, Chuck. That's fair.
So I'm more concerned about just the social fabric being torn because we're viewing athletes as the way for us to make money as opposed to I want to be entertained. And I just think we're getting a little bit out of whack on it. And I know that
this might be a problem that solves itself, Chuck, because very soon the people that bet on this stuff are going to rapidly run out of money to do their betting from everything that I've seen.
There's always new ones coming up, and there's always another paycheck, and like there's
always another sucker.
I know that I sound like the old fuddy-duddy, and I guess I am, but someone's got to play that role.
Yeah.
And just call me Dr. Fuddy-duddy.
Yeah.
Dr. Duds.
This is what happens when you give us nice things.
Yeah. So, in any case, markets right now. Dow is up 402 points. S&P's up 47. Nasdaq Composite up 219. So, we've got all three major U.S. indices in the green. Russell 2000 up 1.25% as well. So, you go today, Russell 2000. You go. Let's take a quick break for the whole rest of the day. We are going to be back tomorrow. I will let you all know how my little casino trip goes. Last time I went, I made $5 in 3 hours. So, whew. Yeah. But again, entertainment. Let's take a quick break. We'll see you tomorrow on the Financial Exchange.